I want to make money. I don't give a shit about the history of options. I don't care about Black-Scholes. I don't care about anything like that. Now, some people go, what, is this guy crazy? Of course you have to care about that. No, I don't. And I'll tell you why. Because I get in and out of my trades usually within 20, 30, 40 minutes max. So time decay doesn't enter into the equation. None of the other Greeks enter into the equation. The only Greek that I care about is delta. In other words, at what percentage will my option price or premium move relative to the stock that is the underlying asset? In other words, if I'm trading Apple, if I buy options on Apple and Apple moves $1 and I buy an option contract that has a 50 delta, the price that I pay for that option will increase or decrease by 50% of that stock move, that $1 move. Now, some people say, why don't you just buy the stock? Well, I mean, I trade Tesla almost every single day. And not too long ago, Tesla was I love trading Tesla. It's a great stock to trade. It cycles beautifully. It trends beautifully, all of that. It's just gotten very expensive. And so why don't you just trade the stock? Because to buy 1,000 shares, let's talk about the Qs, because I think everybody should start at the Qs. And it's got the best leverage. We get the biggest bang for our buck trading the Qs, this exchange traded fund, this ETF. The Qs are, I don't know, I'll tell you right now, exactly $516.82 a share. Okay, so go buy 1,000 shares. What's it going to cost you? What's your investment amount is probably a better way of saying it. Your investment amount is roughly $500,000. My guess, I'm going to go out on a limb here, that most people that have $500,000 to trade today are not listening to me right now. You want to get to the point where you have that kind of a bankroll to be able to do this and scale your profits. So how do you do it? It's not the next best thing. It's almost the best thing blows away buying the actual Q's share. Why? Because here, let me show you. While I'm talking about this, I'm looking at the thing and I can just show you what I'm talking about. Here are the Q's. This is my Option Station Pro. I'm doing this backwards today, but that's okay. I don't really like following any kind of outline. I just like having these conversations with you and telling you like it is. And you will make an intelligent decision whether or not, A, this is for you, B, you can do it, and what's C? You'll be disciplined enough to actually do it. And I say that in kind of joke, in a joking way, because I have every single person that I've talked to always says the same thing. I'm going to follow your rules to the letter. And then they don't. Here are the Qs. This is Option Station Pro. This is one of my accounts, 174744196. I've had that account for over 25 years. Maybe not over, right at 25 years, okay? It's a live account. You can see the price moving, right? Here's the symbol, Qs. Right now it's $517.42 to the right of this yellow ellipse with the red numbers. But here's the thing. I don't care about complicated strategies, nor do I think you should either. What you should care about is how can I use options to make me a boatload of money? That's all I care about. If I'm going to sit in front of my computer, I want to get paid. I have a phrase here. It's called get paid, learn to trade. But you don't need to become an expert and understand every little nuance about the options market and how they're priced and all this. Forget it. If I think the market is going up, in this case, the Qs, if I think the Qs are going to go up based on my rules of engagement, based on my charts, I'm going to buy calls. If I think the price is going to go down, I'm going to buy puts. It's as simple as that. Here's the strike price, which frankly, I don't care about. The price that I care about is blue. Here's the ask for the calls. Here's the ask for the puts. Now, and it's very easy to remember this for those of you that don't have trading experience. You're always buying the blue. Now, if the price goes up, we're going to buy call options. If the price is going down, we're going to buy put options. Some people jump in and say, hey, I thought you sold the puts. No, You're basically taking your money and you're saying, is it going up? I'm going to put it on that side. Here's my investment. I think it's going to go up. I think it's going to go down. Here's my investment. Whether it goes up or down, depending on what side you're on, is whether or not you win or lose. But we're not doing any complicated strategies. They're not necessary. So if you take a look, I have open interest, delta, bid, ask, strike. On the other side, open interest, delta, ask, bid. Now, as a new trader, you can literally control 1,000 shares of a $517 share price for less than $2,000. Instead of putting up $500,000, you can literally put up what's inside this ellipse. I'll move it to the right. To the right of this, on the 517 strike price, you can literally invest $1,740. Call it $2,000. You can literally put up $2,000 and rent 1,000 shares of the Qs. I don't know what percentage that is of $500,000, but it's a 0.000 something. Yet I can control 1,000 shares. Am I going to make $1 when the Qs move $1? Am I going to make $1 profit? No. But you know what I will make? 59 cents. So let me get this straight. I can put up $500,000 to make $1,000, or I can put up $1,800 to make $600. You hear that and you go, there's no way this is real. Those of you that aren't are already involved with trading, you think about that, you hear it, and you go, how is that possible? How do they allow this? Well, these are the weekly options. You'll notice this is today's date, January 7th. How many days to expiration? It's in my yellow ellipse. 0, because these expire every single day. If I drag this down a little bit and I bring up tomorrow's expiration, when does it expire? Tomorrow. These weeklies give us the incredible leverage that we're looking for. This is a trader's dream come true, a day trader's dream come true, because we don't care about holding overnight. As a matter of fact, you should not hold overnight, in my opinion. And by the way, I should have started off this by saying everything that I say is my opinion. Everything. That's the blanket disclaimer. I'm never going to tell you what to do with your money. I'm never going to trade your money. I'm never going to do anything with your money. We are an education firm, and my number one and only goal is to teach you how to spot these trades and give you the tools and the knowledge to do so. What you do with it is up to you. It's 9:17 Pacific, so it's 12:17 East Coast time. Now, all of my charts are on the East Coast time because I grew up trading in Boston. I like being on the same time zone as the New York Stock Exchange, and I'll never change after 25 years. Why am I saying this? Because with the weeklies, I don't think anybody should be trading the weeklies after 12 o'clock Eastern. In other words, today's expiration. So all you have to do, if it's after 12 o'clock and you see a beautiful trade setting up, trade tomorrow's option. Look at tomorrow's expiration. Look at the price difference between the two here. Here's a 517. Let's do this. Here's a 518 strike price, and it's $1.05. Here's a 518 strike price, and it's $2.60. This one has a 48 delta, where this one has a 43 delta. Pretty close, right? You're going to need, on the 518 strike price for today, about $1,100 to buy 10 contracts to control 1,000 shares. If you switch over to tomorrow's, you need $2,600 to rent the same 1,000 shares. $2,600? How's that possible? I opened my very first trading account with $55,000 because the brokerage firm said you can only trade one contract if you have $5,500 in your account. And I thought about it and went, well, I don't want to just trade one. I want to trade 10. So I funded it with $55,000. This is in 1998. And I quickly realized that, wow, they draw the line in the sand that if I take a losing trade and I get below that 55,000, instantly I can't trade 10. I can only trade 9. Okay, well, be disciplined, be dedicated, and have the desire to follow the rules and do things right, and always, build up what I refer to as your stop loss bank. Your stop loss bank is your trading account. I call it your stop loss bank because I want you to take the profits that you make from your trades, stack it up in your trading account to cover future losses, to eliminate the emotional attachment to the money that you're trading. Because the hardest money to trade is the very first dollar that you put into your trading account.